Hello and welcome to CMS Forex Daily Morning Brief. I'm your market analyst, Nick Nassad. Today is Monday, November 9th, 2009. The week opened with traders selling the greenback as the euro managed to break above the 1.49 area, which had been acting as resistance for the latter half of last week. Pair pushed to a 2-week high around 1.50, where the rally stalled in early New York trading. We had a break of two patterns, one an ascending triangle starting from November 3rd's low, and the second one a channel that had set up the last 2 days of last week's session. Looking back, after some strengthening in the greenback to end October and to begin November, we also had a break of a trend line in the middle of last week, around the 1.4750 area that proved to be a rather important indication of where this pair was going to go following its consolidation here. We now look at the 1.5050 level as our next level of horizontal resistance. There were several factors for our rise in euro strength and in higher yielders overall. Asian and European stocks were both higher, managing to shrug off Friday's U.S. non-farm payroll release news. Also, the G20 meeting over the weekend had no mention of the U.S. dollar and its 7% decline this year, or any mention of foreign exchange market at all. Policymakers did say, however, that they will keep the massive stimulus measures in place as the global economy recovers. We also had some positive fundamental developments, including Germany's exports climbing more than expected in the month of September and Australian home loans rising by a larger than expected amount. So the stage was set for a risk appetite and weakness in the greenback. The pound-dollar pair also rallied strongly overnight, climbing around 200 pips from low to high during that span. We managed to break out of resistance around the 1.6625 to 30 level in early trading to start the session, and the pair didn't look back until it reached the 1.6840 level. Taking a look at this pair with 2-hour candles, we see that we had a base of support around 1.6250 since October 25th. That was tested early on in last week's trading, and we managed to move to resistance at 1.66 and then peaked above that late in last week's trading, and then again in Friday establishing a new level of resistance which was broken in today's trading. That means we've moved out of this sideways channel, and here too we had a pretty nice break of a downward sloping trend line that was also retested here to show a place where a person could have bought in for this new upswing. Today's high around 1.6840 goes all the way back for 3 months. In this pair, as we see in this look at it daily candles, with our high last being tested around August 7th. The next level of clear horizontal resistance is the 1.70 area. In a 4-hour view of the Aussie-US dollar pair, we see that we've moved back into the range that we saw when we consolidated in mid-late October between 0.92 and 0.93, and a little higher to 0.9305. So we're testing the upper boundary of this sort of sideways channel we had seen before the greenback had strengthened in late October. So our next level of resistance is around 0.9325, as we're currently testing the 0.93 area here. So we had a bit more number of highs test this level as resistance, with only one peaking higher above to the 93.25 area. In a look at the Kiwi US dollar pair, we had another rather big gap to open this week, 100 pips from 0.7250 to around 0.7350, and the Kiwi managed to extend its gains in overnight trading. Last week, the pair had been setting up in a bit of a triangle pattern with converging lines of support and resistance, and we have broken clear of that pattern to start this week. If we draw a horizontal line of support from our high, we see that we have moved above that level as well. Looking at the upside potential for this pair, if we plot a Fibonacci from our recent high on October 21st down to our low last week, we see that we're approaching the 61.8% retracement area with the 78.6 level just above 0.75. The greenback's weakness even extended to other quote-unquote safe haven pairs as it fell against the Swiss franc. We managed to break out of a 2-period session of sideways action, and here our break was around 1.0125, and we dropped all the way to 1.0050. That shows the potential of the US dollar right now as a funding currency in carry trade. If we zoom this pair out a bit, we see that we're now in the middle of this consolidation zone in mid-late October. Our support is now going to be around 1.0030, let's say. So our theme to start this week is definitely one of risk appetite and one of greenback weakness. We'll see if the rallies overnight will be extended during the rest of New York trading, or if we see now a bit of a pause to those rallies. There are no major US fundamental releases, so right now traders will be looking to equities as their main point of reference for the currency markets. And that'll do it for this morning recap. I'm your market analyst, Nick Nassad. Thank you for joining me here at fxtimes.com, and see you in the afternoon.